I'm the professor. I take complicated stuff and make it simple. Let's get into it. And today I'm breaking down the quiet mistakes that trip up first-time homebuyers before they ever see them coming. These are not dramatic mistakes. They are not the kind of things somebody would warn you about at a dinner party. They are small, easy-to-make decisions that look harmless in the moment, and only show themselves much later in the process, usually at the worst possible time. Once you understand how they happen and why they happen, you'll start to see them coming in your own deal long before they ever cause damage. So let's walk through them together. The first one catches good people off guard almost every single month. It's what happens when somebody makes a financial change while they are already in escrow. To understand why this matters so much, you have to understand what a lender is actually doing during your loan. Most people picture the application as one big approval at the start, and then a long quiet wait until closing. That is not how it works. Behind the scenes, your lender is rechecking your financial picture all the way up until the day your loan funds. They will pull your credit again. They will look at fresh bank statements. They will sometimes call your employer the morning of closing, just to confirm you still have the same job. So picture what happens when somebody opens a new store credit card the weekend after their offer is accepted, or buys a brand new pickup truck because the dealer was running a great promotion, or accepts a new job because the offer was just too good to pass up. None of those things sound dramatic on their own, but the lender's system sees a different financial picture than the one it approved. And when that happens, the loan often has to be re-underwritten, at today's rates, with today's debt-to-income calculations, under today's guidelines. Sometimes everything still works out, sometimes the rate gets worse, and sometimes, if the change is large enough, the loan does not survive the second look at all. That is why experienced borrowers tend to treat the time between application and closing like a kind of quiet zone. They don't avoid life. They just understand that any change of any size deserves a quick phone call to the loan officer first, so it can be planned around instead of discovered. Here is another one that's worth understanding deeply, because it shows up more often than people realize. It is the gap between what a borrower shares on the application and what actually exists in their financial life. Sometimes that gap is intentional. Somebody leaves a credit card off the list because they don't want it counted against them. Somebody decides not to mention the child support, or the alimony, or the lawsuit from a few years back because they are hoping it just won't come up. And sometimes that gap is completely accidental. Borrowers genuinely forget about old collections. They don't realize that side income or seasonal work might matter. They assume that because their job changed only recently, it isn't really part of the picture yet. Here's the part most first-time buyers don't see. Lenders verify almost everything. They pull your credit, they request your tax transcripts directly from the IRS, they check public records, they study your bank statements line by line, and they often re-verify with your employer in the final days before funding. So whatever is missing from the application at the start, the system tends to surface it before the end. And the later something surfaces, the more painful it usually is to solve. That is why the borrowers who have the smoothest experience are the ones who treat the application less like an exam and more like a conversation. They share everything early, even the awkward things, because they have learned that a good loan officer can plan around almost any issue when there is time, and almost nothing when there isn't. Now let's talk about something that may be the most underrated factor in a first-time buyer's experience. It is who you choose to listen to. Friends, family, co-workers, they all want to help. And the people you trust in everyday life will absolutely have opinions about your real estate decisions. The challenge is that the housing and mortgage world changes faster than most people realize. Rates move, programs come and go, underwriting standards shift quietly in the background. Advice that was perfectly sound 3 or 4 years ago can be genuinely outdated today, even when the person giving it has the best intentions in the world. So the question becomes, whose voice should carry the most weight in your decisions? And the answer, almost always, is professionals who are doing this work right now. People who see today's rates, today's programs, today's underwriting realities, with your actual numbers in front of them. There is also one piece of this that almost nobody explains clearly to first-time buyers. The seller's agent does not represent you. The builder's sales representative does not represent you. They are warm, they are helpful, they walk you through everything beautifully. But their professional duty, by law and by contract, is to the seller's interests, not yours. So when you walk into a deal without your own representation, you are essentially negotiating against a professional whose entire job is to look out for the other side. Having someone in that conversation who works for you is not a luxury. In a transaction this size, it is one of the most important pieces of the whole puzzle. And finally, let me share what may be the most powerful force in the entire home buying process. It is something that lives entirely inside the buyer's head. It is emotional attachment. Watch what happens during a strong showing. A buyer walks in and within about 10 minutes, something quietly shifts. They are picturing where the holiday tree will go. They are mentally arranging the kids' rooms. They are imagining the first morning waking up in this exact kitchen. And from that moment on, the way they evaluate the property starts to change. Concerns get smaller, compromises get easier, red flags get explained away. Because what they are really protecting now is not just a house, it's the version of their life they have already started to picture inside it. This is human and it is normal, but it is also the moment when budgets get stretched, inspections get waived, and warning signs get politely ignored. The thing worth remembering is that there is no perfect house. There is only the right house at the right price on the right terms. And one of the quietest sources of negotiating strength in any transaction is simply being willing to step back if the deal stops making sense. That mindset doesn't cost you anything. It just keeps you grounded, and it tends to lead almost every time to a better outcome. So if there is one thing I want you to walk away with, it is this. The home buying process is not really a test, it is a system. A system with patterns, with pressure points, and with predictable places where things can go wrong. Once you understand how the lender thinks, how the timeline really works, who is on your side, and how your own emotions can quietly steer the wheel, you stop being surprised by the parts that trip up most first-time buyers. And that understanding, more than any single tip or trick, is what tends to make the entire experience feel calmer, smarter, and a whole lot less stressful. I'm the Professor. Now you know. Thanks for watching, please subscribe, and I'll see you in the next video.